Good afternoon, everyone, and welcome to another edition of Between the Lines Live. My name is Vanessa Rader. I'm the Head of Research at Ray White Commercial. And sorry if we're running a little bit late here, but we're here and can't wait to talk more today about what's happened this year in the commercial property market and also the outlook for what's happening ahead. So today I'm joined by Pete Vines. Pete is our Managing Director at RWC Western Sydney. So thank you for coming and joining us, Pete.
Thank you for having me.
I think it's going to be an interesting time. So let's just get stuck straight in. So let's think 2023. Looking at all of the research, we've seen transaction volumes down really across all locations and asset classes. Obviously, interest rates playing a huge role in that. So what is your kind of, that's my main observation of the year. What have you seen? What's your kind of thoughts on where we've been in 2023?
Look, I think there's been a lot of inactivity. I think whenever interest rates sort of start to go up particularly rapidly like we saw, the easiest thing for people to do is to sit on their hands and do nothing, particularly when it comes to purchasing a new property. When the interest rates are moving, people struggle to get a grip on where they should be buying. And we, as people, tend to follow what other people do. So I think when others sit on their hands, that's typically what happens. We also have seen a massive slowdown in construction and those sorts of things, projects not taking off because of the fact that nothing really works at the moment, or it's very difficult to make things work, particularly things that were purchased 12, 18, 24 months ago. They simply don't stack up anymore to do in the current climate. So
that's a combination of both that financing piece as well as this rapid escalation we've seen this year in construction costs and labour shortages too.
Yeah, and also values going backwards. I mean, when the interest rates go up, the values come down. It's it's a mathematical equation, and people need a return on their money. So it has been an interesting year. I think there's also been just a general cautiousness from people knowing that times could be slowing, and so from businesses and that type of thing, I think that we've seen not only a slowdown in demand for investments and doing new things, but also am I going to go and grow my business at the moment?
Do I need that extra space?
Do I need the extra space? Am I going to have the demand for online that I've had where there's been all this cash sort of sloshing around the market? So I think a year of caution is really what we've seen, and also holding on. People have been holding on, which is the natural thing to do. I mean, nobody wants to make difficult decisions, particularly when it comes to having to sell something within a portfolio or sell something at a loss.
Yes.
That's kind of the last thing anybody wants to do, particularly when you're spending other people's money, or you're investing on behalf of other people. You don't want to lose other people's money because it's that much more difficult to get money next time.
Yeah, definitely. And if you've seen any of our pieces, we released a piece this week looking at our predictions for the year ahead, and we did use the line "survive to 25" because it kind of felt like a bit of a holding on. We've seen a little bit of that this year. Towards the tail end, we've seen a few more of those kind of distressed sales, a bit more inquiry from receivers and stuff to come and submit on assets. Is that a trend we're going to continue to see into 2024?
Fortunately or unfortunately, just dependent on who you are, yes, I think it has to. I mean, you cannot increase rates the way that they've been increased and not have an issue across. It takes a while for those to feed through to the market. And, again, nobody wants to make an unpopular decision or a bad decision, and so you hold on.
Yes.
But it gets to a point where, unfortunately, you can't hold on any longer. The equity or whatever it is that was in the deal previously is gone.
Yes.
A lot of people have saved money during COVID. That's gone. People have spent that money now, and there's still a lot of people obviously out there with money, but it's certainly, I think, I think next year is really going to be the time where people say, we cannot hold on any longer. We really need to do something.
Yeah, particularly if with interest rates. So interest rates held again yesterday. It's what most people expected. do you have a thought on where you think next year's kind of going to go? I think the popular kind of thought is there might be another rate rise in there at some point early in the new year before it may kind of come back down, but not till the tail end of the year. I suppose that kind of again makes it a bit tough to hold on. And the other thing as well is that,
I mean, the last interest rate rise, rocked people.
Yeah, because I think that whole sitting on your hands thing is a really interesting point, because people certainly through much of this year were sitting on their hands or wait and see. We did see a period where interest rates started stabilising, and I think people's confidence kind of came back a little bit.
It did.
But then it went up again, and that's it. They were all just, okay, let's stop that again. So I think
it's the Reserve Bank. Don't get too confident.
Yeah. So I think that we might have a very similar 2024 then looking ahead, because if there is that possibility of another interest rate increase, even if it doesn't, there'll be this kind of peak interest rate. People will just do this whole continue to sit on their hands, wait and see.
There's really the haves and the have-nots as well, and there are still a lot of people out there who have a lot of money who are still spending a lot of money. I thought it was quite interesting to see the Black Friday sale data in terms of the increase in that. And what will be even more interesting is to see whether it's an occurrence where people are spending money early, so they're spending their Christmas money on Black Friday because they're buying better value, which is highly possible.
Yes.
In which case, December Christmas sales will really suffer.
Yes.
I think that'll be interesting to see.
Yeah, for sure.
But yeah, I mean, look, in terms of interest rates, I think the predictions change sort of
they do.
weekly at the moment. I think everybody assumed that there would be no rate rise in December. The last rate rise, though, like in fairness, I'm speaking with clients who have hundreds of millions of dollars of property, and rate rises like this each time consistently, they start to hurt.
Oh, of course.
Because instead of a property producing you money, it's starting to cost you money. And so it's, at what point do you stop putting money into it? And when's it going to start to give back? Because, there's interest rates, but there's also taxes. Land taxes are at record highs. Insurance has gone up. Electricity, it just dwindles down whatever was left over, where you sort of get to a point where you're like, I better have some conviction about this thing long term, otherwise what's my purpose for holding? So it will be, it'll be very interesting to see, but I genuinely think there is, there's people out there who are struggling, unfortunately, and, there are businesses who are starting to struggle, and I think that, I don't see next year being any different. I think next year is actually...
And I think volumes will stay reasonably low as well. I think, they don't, unless they, like you said, unless they're really kind of, it'd be an interesting one.
I think volumes will increase. Look, in terms of, and this is just for my, this is my opinion. We talked about that before. I have a bias to talk about Western Sydney because that is where my market is. And my market probably is more susceptible to change as opposed to a potentially more established market like, the eastern suburbs or something like that, where the people, it's generational wealth. It's been held for a long time. It's, if we don't get the right price, we're not selling sort of stuff at the moment. We just ride the storm. I think in our market, volumes will pick up because I think it will get to a point where there's no point holding it any longer, particularly in land where, there is potentially no exit in the sort of short term. Okay. It's a much longer term thing, and funding starts to get more difficult.
Yeah, definitely, and we're certainly seeing that for a lot of this year, towards the end of this year, and we'll continue into next year. Okay, well. Knowing all of that, do you want to go through the asset classes? Is any, do we want to kind of go through the different asset classes where we think it's going to go, or do we want to try to pick out some opportunities? Where do you want to go? Where should we go?
Look,
Western Sydney is your area, so is there something... Well,
again, it depends whether you're a buyer or a seller. I think there's always good opportunity in any market. Look, there's some obvious real challenges out there with, the office market still has some challenges.
Let's leave office market alone. Let's look at.
I think that's a really good idea.
Let's go. We'll come back to it at the end, but let's look industrial. So industrial, clearly the winner of the last couple of years.
Yeah, absolutely.
In terms of returns, both for income return and also just kind of capital values.
Yeah.
Again,
the weight of capital chasing industrial has been
huge,
because it's an institutional grade asset.
That's right.
Yeah.
Now we're starting to see, and also no development really going on in that space. Cost is quite high.
And everybody was buying land because that was going to be the thing. Yields were low. Construction was more manageable. I mean, there's clearly demand out there in certain areas, and I think there's been this whole rent story, which has been phenomenal for some people. Your rents have gone from 125 to 250 a metre. Like that's
huge.
It's a great story.
Yes.
I think there will always be demand for good quality space, and I think the larger players in the market will continue to dominate and continue to take market share.
Okay.
I think the smaller businesses will find it more difficult to compete in markets like this. They're not as liquid. They probably don't have the same buying power as some of those larger businesses that have the marketing power. And so I think it's the overall demand for industrial in terms of tenants and things like that, I don't think it can continue to be as strong as it has been.
Yeah.
I think, when money's sloshing around and everybody's buying online and they're constantly spending money, we have to house this stuff. I agree there's been a fundamental shift in the way that we consume.
Yes.
But I also don't think that you can just have this never-ending growth
I agree.
and demand for more and more and more space.
Yeah. Well, I think that's fair. Like we've had this kind of record amounts of demand. That's why we've seen such a huge uptake in the rents.
Yeah.
Vacancy is nothing,
Yeah.
or very little.
Yeah.
I think that until kind of that. Well, there isn't all that new supply coming on. That's
Which
really
is
impacting,
fantastic. Which is fantastic.
Because otherwise, that could cause quite a big
if there was
issue.
too much land coming on, then we start to have a problem moving forward. But I think that the fact that it is constrained, that servicing costs are as high as they are, will keep rents high and keep supply low.
That's fair enough.
I think redevelopment of these dark warehouses, and I mean it's all about timing, right? People want stuff quickly.
Yes.
They're very demanding.
Yes.
We want everything now.
The last mile.
The last mile.
Yeah.
Yeah. The last mile.
So that's more of that infill stuff around the
multi-level, and I think that will just continue to grow because it has to.
And also, how about kind of some of those that stock that built form? I've been saying kind of built form is going to be king. It costs so much to develop something now, so something that has an opportunity to be repositioned or a bit of a facelift and really get that uplift in rent.
100%. Whenever you don't have to build at the moment, I think is because you're not taking any development. Well, you're taking less development risk. You're taking less construction risk. Your time to market is far quicker.
Yeah.
You're not going through DAs typically and stuff. So I think that there is very good value in that, and not only in industrial but also other asset classes as well, where
there's a structure
maybe retail, that type of thing where you can get in, refurbish something. It's certainly a big topic at the moment, refurbishment.
Yeah, definitely. So that's definitely an opportunity in that industrial space. On other opportunities as well, is because we talked about the sheds, I want to go back to the beds, and that's another thing that we've been saying, beds and sheds.
Say it 6 times really fast.
Yeah, no, I can't say that. So beds and sheds. So obviously housing market, this is not, the Western Sydney is probably a really good candidate for very constrained when it comes to housing. But across the country, it's not a story that's dissimilar anywhere. We've got population growth that's coming to Sydney is going to Western Sydney. We know that.
Yeah.
But we aren't developing the residential housing required. That's why our vacancies are so low. We've seen rental growth as well, really quite high.
Yeah.
So beds. So beds obviously takes lots of different forms, but let's talk about, I'm bringing out a piece next week that's just talking about opportunities, and my number one is going to be the block of unit market. And that's like the
I
Western
love
Sydney.
blocks of
Yeah,
units.
they're awesome, aren't they?
Yeah.
So
Yeah.
like such an not
Not
underrated.
everybody
everyone-
can buy them though.
Yeah.
It's sort of, and it's typically been a mum and dad style asset. But look, I just, in a market where there's uncertainty, it has to be one of the best products you can buy in terms of buying an asset, relatively easy to understand, ability to add value through renovation. Some people rent them through Airbnb to really work the asset that much harder. We have a shortage of residential, and so that's going to keep pushing our built form stock up, because the new stuff that's coming through will have to be more expensive.
Yes.
And there'll be less of it delivered. So I'm exceptionally bullish on anything residential. There's been also I like houses as well. I like land. Particularly I like land around stations. There was a document that was leaked, apparently, by the New South Wales government yesterday. I'm sure it wasn't them who leaked it, but somebody did. WikiLeaks. But houses near stations, land near stations, we have an issue with housing, and so we're going to start to see density. Housing, you get in at a much more affordable level. You should get very good rents on stuff at the moment. Then hopefully you get a pop in value at some point because of that densification around stations and transport nodes, which fundamentally makes a huge amount of sense.
Yes.
And is really the only way to solve our housing.
Yeah,
crisis.
because you can say as much as you want, let's build all these houses, but we all know that the planning and the time to construct and then the lack of labour and all that sort of like you're talking about a project now. It's like you're not going to be delivered for another 6 years. Do you know what I mean? Like it's not a short term solution.
And
so
that's
we need.
why I like existing. And honestly, that's why you buy a block of units.
Yeah.
Because it's ready now.
Yes.
You're not having to wait for it to be built. You don't have to get a DA. You sit on it. You collect your rent constantly.
Yeah, you can collect your
Whereas
rent.
the moment you buy land, you're paying for your land. You've got no income on it.
That's exactly right. So definitely, I feel real confident on that part of the market.
But I mean, with the immigration we've got, even boarding houses.
Yeah, that's another one.
Boarding houses, co-living, the new boarding house. Build to rent, all that stuff. Look, I don't know.
But build to rent is it's so far away, and like you said, it's going to create this new kind of minimum viable product. Do you know what I mean? It's going to be expensive for people to occupy this, to build it.
Expensive.
Do you know what I mean? So it doesn't really
the rents are going to be
solve the solution that we've got.
We have an
problem now.
affordable
Yes.
problem. I fundamentally think though as well that there'll be two things. So I think the government will stimulate off the plan sales because they'll have to. So the investors, when interest rates set, will come back into that market because the returns will be strong.
Yes.
Plus there'll be incentives. But I also think that because the gap between houses and apartments is so big now,
Yes.
there is no affordability anymore. And so the affordability that will be found will have to be in apartments. And so, those values will grow and they'll have to grow because the people who were buying houses who had this much money will now be putting this much money into units because houses will probably be out of reach for many people.
Yeah.
And so I'm hugely... also, we don't have enough housing, so you have to build something, and you can only build so many townhouses.
Yes.
We have to have densification.
Yeah.
That's the... Yeah.
On that, just talking about around those nodes and things, what about, you have any thoughts on just kind of jumping to retail? What about retail, like those retail kind of neighbourhood centres that are sitting on large parcels of land that, they're right on the transport nodes and all sorts of things? That's a future opportunity.
Yeah,
possibly.
absolutely. Look, anything on transport I like.
Yeah.
Industrial and transport, retail, anything where people gather, you know, and there's large movements of people, you heard it here first, St. Mary's. I love St. Mary's because there's going to be a link from it to the new airport.
Yeah, yeah.
It is a sleeping giant.
You've seen it that's gone through the tunnel.
And so that is an area for me is highly undervalued. It hasn't been fantastic. It has had a stigma attached to it in some ways. And so I think it really is right for regentrification and value growth.
Yeah.
Like I just, particularly houses and that type of thing in those areas, I think is, is very good. It's not a commercial investment per se,
Yep.
but if you're looking to buy and diversify your portfolio, and some people don't have $10 or $15 million to spend on asset, I think houses in those sorts of areas are a real
Heard it
good
first.
way.
Heard it first. Heard it first.
If you can build boarding houses, I like co-living.
Yes.
Because I just think that given the population that's coming in and the students, I think they will have to restrict numbers to a degree, but it's that balance of we need workers and workers both skilled and non-skilled coming into this country. We need students.
Yes.
And there's I'm oversupplying the housing, I'm putting too much pressure on the housing market, but at the same time, if you don't have those people to help with the building, to help, wash dishes, architects, doctors, we have a lack of skilled and unskilled labour. And so I think that immigration we need desperately as a country to continue to support us as a nation.
Yeah.
And so all those people need somewhere. And that's honestly, that's why I like residential, because no matter what is happening, people have to live somewhere.
Yep. Yep. Totally. I totally agree.
I think it's safe as houses.
Yeah.
Yeah.
So then, talking about development sites, sounds all good in theory, but we've got this issue with the construction costs, making a lot of these kind of projects not stack up, and that's what we opened up saying, great, but a lot of these sites that were bought
and buildings unlikely to come back in terms of
Yeah, well, it's not going to go backwards.
No.
We've set the new normal. It keeps on going up, albeit at a lesser rate. But
so
it's
there's
not
only
gonna go
two
back.
things that can give:
Yep.
land,
Yep.
or the end value.
Yes.
So
Take your pick.
take your pick. In some cases, it will be land. Particularly at the moment, land is the most impacted.
Yes.
It has to be the most impacted because it's it's at sort of the initial stages. But I again, there will be stimulus pumped into that space because you can't have housing. You cannot have the rental growth that we've had in the last 12 months continuing year on year.
No.
You want to try and control rents to a degree, and it's very difficult to do unless you're delivering stock.
That's
and
right.
so, but I also, again, I feel like those. You look at the end values around Lidcombe or Parramatta or those sorts of areas. They really have fundamentally not moved in the last 10 years.
Okay.
And so you might have seen an uptick in certain spaces, but they fundamentally haven't moved.
Yeah.
And so there is room for growth. There has to be room for growth. And so, again, instead of people going and buying houses or, they will buy units because they're close to transport, they're close to all of those things. And then the investor will come into that market because the yield will be good, and I'm sure there will be incentives to help them do that.
Yeah.
And so, I actually think buying off the plan now is a very good time before values move because they're still stagnant at this point.
Yeah, for that new product
For
in
the new
those
product.
in those locations.
Yeah, absolutely.
Okay.
Absolutely. Because there's a limit to how much can be developed.
Yeah, for sure.
And with builders not around either, it just will become more and more
Of
challenging
course,
to
of course.
deliver.
Well, I wanted to try to get to something a bit more positive, but I want to go back to
all
office.
positive.
So it is
No.
it is
No, it's
positive.
not,
Like
it's
there's
not. It's challenging. There's opportunity, but it is
there's
challenging.
opportunities
Yeah.
in everything. So, but let's just quickly touch on the office market because we need to just. I know, but let's just talk about it really, really briefly.
Yeah.
Vacancy is probably going to stay reasonably high over the next 12 months.
Yeah.
We have definitely seen this flight to quality. So,
Yes.
the premium A grade stock. There's a bit more activity happening in that space.
Yeah, that's people are going to that space to try and bring people back to the office.
Yeah.
I fundamentally believe that people will start to return to the office.
Yes.
Particularly when things get more challenging, I think there will be more people in the office.
Yeah, I don't disagree with you. As soon as we're going to start seeing a bit of an uptick in unemployment, there's no question about that, and so that will really stimulate people coming back in, and we'll see a bit more activity happening in the office space. So just kind of watch this space over the next little while.
Yeah.
So
it's a great time to. Look, fundamentally, you're buying office below replacement costs in some places. So, how low does it need to go before it makes sense to do? At some point, people will come back into the office.
Yeah.
And there will also be naturally a withdrawal of certain stock in markets
Yeah.
to make way for new buildings.
Yes.
Maybe everybody will move from the CBD out to Parramatta.
Yeah.
You
Well,
know,
there's some
that's
great
great opportunities.
Yeah, well, there's some great buildings out there. Like, it's,
and the amenity is
awesome.
very,
but
very
also,
good.
like, we say this stuff, but historically, if you look at the vacancy over a longer period of time, or in the yield kind of movements, this is not as if this hasn't happened before.
No,
I
of
know the
course.
fundamentals are quite different,
Yeah.
but we've seen these levels
Yeah.
before, and the market takes a bit of time, but
Of course,
it's going to correct. It will correct.
It will correct. And again, I think as people will start coming back to the office. I think as nice as it is to do the flexible, and there is a place for it. I do think more people will be in the office,
Yeah.
managing expectations.
Yeah.
Yeah.
I don't disagree.
Yeah.
Okay.
But
what
there's
about?
always opportunity.
Well, there is opportunity.
Yeah.
But there
Yeah.
100% is.
Yeah.
I totally agree that there is.
Yeah.
And what about kind of the alternatives area? Like, a lot of people obviously jumped on that bandwagon. I
Yeah,
shouldn't have said it
COVID,
like that,
yeah.
maybe
No.
during
No,
COVID.
no,
but it was
but-
true. Like,
Well,
probably a
that
lot of
fundamentally we there's very few investors that are trendsetters.
Yeah.
People follow what everybody else does.
Yes.
That's why you have FOMO.
Yeah. Well, we certainly saw that.
So it's following activities of other people. So I just think it's human nature to do that because it validates our decision to move in a certain direction. But in terms of alternates, like everybody's talking about life science and medical and all those things, they're fantastic.
Yep.
They're great. There's a place for it, but you have to buy it at the right price.
Yeah.
Not everything can be medical, despite all these developers wanting to do
Yeah.
medical. Not everything, unfortunately, can
Yeah,
be medical.
or you can repurpose it. Like when we did
Yeah.
our medical, like you can't just easily repurpose an office
very
building or
difficult.
retail into medical.
It's very
like
difficult. It was built for a certain
use, yeah.
usage, not another. And the cost of converting it is often,
Yeah,
it's
particularly now.
so expensive that
Yeah.
it just, you might as well sort of start again.
I
So-
think that the alternatives is still still awesome opportunity, but it's it's back to kind of investing 101, if you like. Put your sensible hat on. Like, it's back to the fundamentals of looking at any location. Is there a need for that service? Is there an oversupply of whatever it could be? What is it?
That's what we're seeing at the moment,
that
though.
people are starting to think
the
about
flight
that
to quality.
Yeah,
Yeah.
but also just kind of remembering they're the fundamentals when you're investing in commercial property.
Absolutely.
And a lot of people,
Yeah.
like you said, had FOMO, and those things
They
went out the window.
Bought whatever.
Moved up the risk curve,
Yeah.
thinking no, it will be okay. So we're just
They
coming
weren't factoring in the risk. They were saying, "Don't worry, we'll worry about it
later.
later."
The money's cheap, so let's just
That's one of the biggest things I would say that I've remarked this year is people's appetite. People want quality.
Yes,
They will not just buy anything now.
yes,
They will at a deep discount.
yes,
But people are far more picky about what they're buying, who the tenant is, what their business is, what are their chances of survival. It's really, instead of people talking themselves into buying at the moment, they're talking themselves out of buying.
yeah.
So it's a lot more sensitive in terms of their risk appetite.
And the savvy investors that are in the market at the moment, they're not in a rush.
No, they're not.
They're happy
patient.
They're patient.
They're patient.
They're happy to find the right product at the right price. And if it's not your one, there'll be another one that they're looking at. Like they're
It's
being,
very unemotional.
but it's
yeah.
being it's like
That's
it's just
clever. I mean,
it's a-
that's how they've gotten wealthy to begin with,
Yeah.
is investing and being patient and buying when
Yeah.
others aren't.
that's right. So I think that's
Great time to buy.
That's the flavour of 2024. I really
absolutely.
do believe that, and there's
Absolutely. Yeah.
opportunity everywhere. It's
Yeah.
just
You just gotta keep on it and chase it, and there will be very good value particularly for people who are cashed up next year.
yeah.
Because it's going to be that much harder to get finance, but there will be fewer buyers in the market, so it's I think a good time.
Yeah.
Yeah.
I think that might wrap us up. I think so. Hopefully,
I could dribble for another couple of hours if somebody.
yeah. I'm happy to talk about this for a long time as well. But it's
Yeah.
like it's going to be a tough next 12 months.
Yeah.
But there will be opportunities there. There is a lot of investors.
And there is
investors
fundamentally
out there.
light at the end of the tunnel. It's more a
100%.
question of, and that was a discussion we were having, is, there's a huge amount of positivity in our market. It's just, you just have to get there.
Yeah.
And so you have to hold on until you can get there.
Yes.
Because when we do, boom, it goes again.
Because at the end of the day, commercial property long-term investment. The market has always been cyclical. This is not
Absolutely.
new information. So
No.
we're just in that
We've
that
just
lull
had the boom
period.
forever.
We just need to, we just have to kind of ride out the storm if we can,
Recorrect, yeah.
and recorrect and like,
Reset.
and we'll go ahead. But we've got the fundamentals of, the population, which is huge
Yeah.
as well, which is going to be an interesting time. But thanks so much, Pete.
Yeah.
Hopefully everybody got quite a bit out of that discussion, and I thought that was really interesting. And please read all of our stuff we've got coming out this week and next week, looking at the predictions and some of the opportunities for the year ahead. But thanks again, everybody. Just a quick reminder, this is our last webinar before the end of the year. As always, later on today, this will be available on Spotify, so go back and listen to the ones that we did, last year, and did we get it right or did we get it wrong, and go back and have a listen. So have a great Christmas and a great holiday period for everybody. I hope you all enjoy yourselves, and we'll see you again next year. Thanks so much.